I think the telco industry is really at a very interesting inflection point. There is a lot of sort of difficult things going on, I think, amongst the players, and it feels a little bit more aggressive than I think you would have thought. Telstra is definitely defending its share, defending its position, maintaining its operating leverage, and using price as a lever. TPG can also play that game because they own the backbone, they own infrastructure, and I think Vocus doesn't own as much infrastructure, so it's playing the game. They're sort of playing off each other, the three of them, which is leading to they use the words in the results. There's a price war going on. It's being aggressive. We need to invest in price. We need to defend our share. We need to defend our turf. We need to protect ourselves. I mean, these words are words of a fight. So for me, I think it is a very, very big change, which I think when you look back a year ago, you didn't expect that this is where we'd be. But with share prices down 30%, valuations have been, really altered by that sort of movement of aggression of price back into the marketplace, because that's not what you thought. Like typically in a marketplace, you get a duopoly, and the two of them are quite rational. But when you do get three players, it's very normal behaviour that you get a more aggressive disruption. Well, there's sort of three paths, I guess. You can get sort of TPG and Telstra maybe being the bigger ones, sort of dominating, and Vocus becoming the weaker one. You could get Telstra being dominant and pushing out the smaller two, where the likely outcome is consolidation is difficult because of the ACCC regulation. I think it'd be difficult, but that would be the normal outcome. And otherwise, the third scenario is a nice one where it gets more rational, and I think that the three operators just choose to not be as aggressive, and then they choose to invest in either innovation rather than price, and that's how you get a better outcome in a marketplace. And if you look at marketplaces in the world where you've got three players and you go through an aggressive pricing period, that is the best outcome for the whole marketplace, that they invest in innovation and look after their customers and delight their customers rather than try and compete on price. So that's kind of where you'd hope it ends up. But at the moment, I think it's definitely in that messy, price aggressive environment where people are trying to defend their turf. For me, TPG is probably the most favoured horse for me because it's a low cost producer and it's probably the most rational. So for me, and high credibility is high as well. So and the founder still owns a big chunk of the business. So for me, in terms of duration, I'd be most comfortable owning TPG, just because the duration is probably the longest, given its low cost, high cash generation, has the backbone, rational management, founder's still a big shareholder. They're the attributes that, for me, signal that that's kind of the horse that you're more likely to back rather than others.